What is going on, traders? In this video, we are going to be talking about what you have to do before you approach your charts and before you start trading. What do you look at? I get asked this question quite often. People do not really know what to be looking at, what to be focusing on, and how to approach the charts. They just take trades out of the blue, little in the middle, and basically start losing trades for absolutely no reason whatsoever. So what I'm going to be covering in this video is going to be a little checklist, things you can do before you start trading to actually get a higher win rate, to establish and know exactly what you're going to be doing and looking for. Let's actually get right into it. So first things first, let's actually go back a bit of time. Let's go to Monday, the 12th of June right here. And let's take a little peek at what the market is doing here. So what we can see overall is that the market has been trending down quite often, what we can see is that the market has been trending down quite a bit. We can see this on the 15-minute, you can also see this on the 4-hour right here, and on the 1-hour, of course. Pretty strong trend. So what I do suggest you do is to first try and establish your bias for the day. What is it you're going to be looking for? And the first time frame you're going to be looking at is going to be the daily chart. Now on the daily chart, what do we see right here? We see that we are basically pulling back. Price stepped into this volume imbalance that we have right here. We had this volume imbalance, price stepped into that, and now it seems like price took out liquidity from this high right here, and it seems like we are now rejecting that bit of liquidity. So looking at the daily chart right here, I would be looking for trades lower. I would not be targeting these lows specifically. I would more likely be looking for some internal liquidity because price doesn't really have that much of a reason to come back down to all of these lows. However, I will be trading and looking for shorts on this day just because we just took out such an extreme level of liquidity. We can assume that we want to rebalance something on the higher time frames like the 1-hour or the 4-hour. So let's jump down to that time frame. So right here, what do we see? We see right here that we swept that liquidity. And what do we notice? We notice that we have quite a bit of imbalance resting below still. Now it seems like we are indeed reacting off of a fair value gap that we tapped into right here. And it seems like price is reacting off of that. So it could be that price is going to want to be going for some sort of liquidity. So let's mark this up. Let's actually say that we have an FEG right here. And let's also mark up that we had the sweep right here. These are going to be the strongest things because we can see them on multiple time frames. We can also mark up that we had a reaction to that FEG right here. And this we can mark out as being the sell side liquidity. And we can mark this out as being our buy side liquidity. Now, we do not per se know what price is going to do now. If we look at this chart, what's likely going to happen is we are going to go for the buy side liquidity. But we also know that we have a fair value gap right there. So we would be waiting and going to the lower time frames to look for one of these things to play out. So either we are going to go down and have a strong reaction to that FEG, where we can then anticipate a discounted entry and target our buy side liquidity. Or what we could also do is we could wait for the buy side liquidity to be taken out and then have a strong reaction to the downside to then catch an entry in a premium area to then target the FEG for the day, for example. So let's actually hop down to the 15-minute to get a bit of a better overview here. And now we can really start to identify where the short-term and internal liquidity is resting. So if we take a look, what do we see right here? From the Asian session, we actually left behind quite a couple of equal highs. And it seems like price is actually gravitating towards that, right? And of course, we can only start trading from 2 a.m., which is going to be our London Open. So what I would be anticipating is price running above these buy side liquidity. Let's mark that out. So we have our buy side liquidity here. And then right after that, what could we potentially target? We could be targeting that FEG that we actually marked up on the charts right here on the 4-hour, which is also around equilibrium. So as you can see, what I just did is I actually used all of the above timeframes to establish a bias before I even thought about taking a trade. So now I have a clear goal. I know exactly what I want to see and I know exactly what I don't want to see. So let's actually play price forward and see what happens. Seems like we just took out that buy side liquidity. So now what do we wait for? We wait for a clear market structure shift. And we also wait for some displacement in our direction before we can actually think about taking a trade. So those are two things that we now need to have in our checklist, because the first thing that we checked out is that we just took out buy side liquidity. We know that overall we are quite bearish. We know that we are in a premium zone right now, and we know that we have imbalance resting below. which is going to form our bias. So now all we need is the entry model. So let's wait for that to set up. As you can see, the market is pretty undecisive at this point, and I would not even be considering taking a trade at all here. We do get displacement to the downside now, but in order to get our market structure shift, I would be looking for this low to go. This low going, this was just a little range. It could easily be manipulation for us to continue higher. And it seems like we are not getting that market structure shift just yet. Now we could argue that we do, but we just have a wick down. So what could this potentially be? We could potentially be thinking about that this was a sweep, meaning that the price is likely willing to shoot on higher. So now we of course have to reconsider what price might be doing. We know that we just took out the buy side liquidity. If price is showing us that it goes above this, then we can probably be pretty sure that this was not a sweep, but that this was price basically breaking market structure, showing us that price wants to continue up higher, targeting imbalance above that, or some more buy side liquidity. So let's wait and see what the market shows us. As you can see, we have really strong displacement to the upside, showing us that the market is indeed willing to go higher. If this was a sweep right here, then price would never be coming back to it because all of the liquidity just got taken out. So the fact that the price is now pushing upwards basically means that we want to go higher. So now what do? We know that our analysis was not spot on, right? We are not going for that fair value gap right here. We still have the higher time frame buy side liquidity marked up right here. So do you remember in the beginning of the video what we said, what we're going to be looking for? First, we're going to look for that buy side liquidity to be taken to then trade lower. What we could do is actually anticipate that that's going to happen still and actually make a play targeting that buy side liquidity. So that's something that we will be doing right here. So what I would love to see right now is price actually going up, showing us that we have a clear market structure shift. And then once we do, we are going to try and catch a trade long here. All right, so it seems like price was going up, but it didn't really give us an entry at all. Now, however, it does show us that it wants to go up, and we have a perfect ICT 2022 setup. So what do we see? We sweep the lows here, so we sweep liquidity. We also have a market structure shift. Let's actually wait for one more candle to show us. Yes, we are clearly closing above, so that's pretty good news. So this is our market structure shift. And what do we see now? We have a nice fair value gap right here. So what I'm going to be doing is anticipating that price is going to continue up higher. I'm going to place a long order here. I'm going to simply cover this low because we swept this liquidity. So if price wants to continue higher, there's no really a reason that price should come back here. Plus, we also mitigated the fair value gap that we have right here. So we have stacked confluences here. Now, what could we target? We could go all the way for what we marked up as our buy side liquidity, which in this case would provide us with 12R. But of course, what we could also do is we could use our PDZ array, and we could be looking to take some partials around equilibrium. So around equilibrium, what do we see? We can see that we have a big fair value gap. So that could be our first profit target. And then for our final target, we could just target that buy side liquidity. So right here, that line is going to be TP1, if price, of course, comes to that. Right, so we have our trade. We know where we're going to take partials. We know where we are going to take all of our profit out of the market. So let's see what actually happens. All right, so the next candle actually tags us in. Let me move the box and the trade here so we can clearly see that. The FEG might make it difficult to see, but this is our imbalance. We just tagged into that, and we get an immediate and strong reaction to the upside, and we reach our TP1. So right now, we would take off a percentage of our position. Let's say we take off 50% right here, and we basically bang. This is 2.4R, so we basically collect 1.2R. And at this point, what we could do is manage our stop. Let's say we cover commissions, we manage our stop right here. So this is our stop loss, and we let the rest of the trade run and see if what we marked up is going to play out. We are moving up quite aggressively. Now price is near the OTE. If you see price slowing down or you don't like the price action, you could easily take another partial right here. And as we can see, price is slowing down. It is, of course, London lunch, so we can expect price to be slower. And then we actually hit our full take profit target. There we go. So if you didn't take partials, if you just held this trade, we would have made 12.6R. In this case, we took partials. So let's divide that by 2. We basically made 6.3R, and we can then stack our 1.2 to that. So we made 7.5 R on this specific trade right here. And now, of course, the market is doing what we anticipate that it was going to do. So this is not based on just looking at the 1 minute price action. This is actually based on the higher time frame. So now that we are taking out that buy side liquidity, what do we say? We were going to be looking for shorts. So let's actually hop down to the 1 minute and see if we get a setup, because we just took out that higher time frame buy side liquidity. So we actually do form a setup here, but I'm not going to take the trade. That's something that I will also not do live, simply because we are now during London lunch. I would like to see us trading into New York first, because I do know that sometimes New York will come back to take some liquidity from London before continuing its actual move. So that's what I will be waiting for. I will be waiting till 7 to think about entering a position. It does seem like we are reacting to that buy side liquidity quite strong already, which just confirms that the level of buy side liquidity is in fact very relevant. Right, so now it is 7 a.m. and what I would now be looking for, because I still want to catch a trade right here. So what I will be looking for is a sweep of a high. And as soon as we have that sweep, I then want to see displacement to the downside, confirming that we are still willing to go lower. And then I am going to try and target some sell side liquidity on the lower end here, and also use the higher time frame to decide where we could potentially take profits. So let's wait and see if we can get a sweep. Okay, right here, it does seem like we are taking out some buy side liquidity. Now the candle did close above, so if it continues up much higher, it will likely not be a sweep, but again, a continuation. So then we could be looking for trades in our premium zone right here. We get an instant reaction to it, so now let's wait and see if we get a market structure shift. All right, we do get our market structure shift right here. So now we could be thinking about taking an entry off of a fair value gap right here in this area. So to determine where we are going to take our trade from, we can simply use our PD array again. So as we can see, around or above equilibrium, we have this fair value gap right here. Let's mark that up. We have this FEG. So that is what I would be taking a trade off of. That's where I would be setting my order. And as a stacked confluence, what do we see? We have an order block right here. So let's quickly cover that high. As for our target, we already took a winning trade. So I would say targeting some sell side liquidity that is relatively close would be ideal. We do see that right here, what we left behind was quite a bit of imbalance. Now I also like to go to the higher time frame and confirm that something like that would make sense. And to me, indeed, this makes sense, because on the higher time frame, what we see here is an order block. So what we're playing here is that price would be moving down lower, and we give it some space to actually move down into that order block and then have a reaction to it potentially. But I would not like to be sitting into the drawdown to actually target that fair value gap. So what we could expect right here, we took the buy side liquidity, we move down, we tap into that order block, see some kind of reaction and pull back to equilibrium before we then possibly continue for that fair value gap. But at that point, I don't want to be in the trade no more, simply because we are in New York now, and targeting such a long trade would just be a bit optimistic in my opinion. Right, so we know that our target makes sense on the higher time frame as well. So let's set a trade there and let's see if we get tagged in or not. Let's let this trade play out. And it seems like we are moving down. Right, so at this point you could be entering right here. I'm still, because the market structure shift right here was kind of weak, right? We just wicked down to it. But this could potentially be a sweep. Now we did have a sweep right here, a confirmed one with a market structure shift down here. But the bigger picture market structure shift right here was not as strong as I wanted it to. So I'm not going to chase an entry here. If it comes to my target where I want to be filled, it's fine, but I will not be entering lower here. I don't want to risk too much. In this case, it seems like we do get filled. We tap into that fair value gap and actually have an immediate strong reaction to it. This is really good, right? So price is running. Let me clear up where we exactly entered. So this is where we got filled. And now we're just gonna let price play out. Right, so price almost came back to around break even. So what we did right here, because a lot of people will be choking at this point, still we would not have been tagged out at break even. What we did right here is inducement of liquidity, right? We induced relative equal highs right here. We then took out those relative equal highs. So we have a sweep right here. So what we could possibly be looking at is a re-entry. So we have our model form here. This is the lowest point that took out the liquidity. So this is our market structure shift. We move down. And what do we see right here? We have a fair value gap. We could potentially take an entry off of this targeting these lows again. And this is again all playing the higher time frames, not the lower time frames. We have a higher time frame target in mind, and that's what we're looking for. We're not going to be looking for moves in between. We're only going to be looking at extremes and try to play those extremes. Now, in this case, I would probably, and in my live trading, would also not re-enter on this. I would just let my trade play out. My stop would definitely be above this high right here. So this would be my stop loss, and I would just see if my trade plays out or not. I already made a lot of money on this day, so I would not be thinking about partials. And as you can see, boom, we just filled our target and we made 6.6 R on this specific trade. So we just traded both sides of the market. We did use a bias. So our first bias was the buy side liquidity, and then we were targeting the order block on the 1 hour. And now we can anticipate that price is potentially going to move lower into the imbalance that we had. But this is basically my systematic approach of how I start looking at the market, how I establish biases. So to summarize, again, I would first be looking at our daily chart and try to see where is the market likely going. We noticed that we swept liquidity, so my bias was first bearish. Then we noticed that we started displacing upwards, so then we could target the buy side liquidity that was resting there for longs. We then scaled down to the 1 hour to get a better picture. Then we scaled down to the 15 minutes to get a more visual approach to what the market was doing and where the short-term pools of liquidity were. As soon as we noticed that we were displacing over a pool of liquidity, we could probably ensure that we were going to hunt something else, in this case, the top buy side liquidity. And then as soon as we mitigate that and we start moving down aggressively, we could anticipate that the market is likely going to be targeting some more sell side liquidity or some imbalance to the lower end. And these were the two trades that basically came from this. Now, if you want to learn more about forming a daily bias and learn more about the concepts that I use in general, I do have an elite membership where I will guide you personally. I present you with a course with really simplified ICT teachings. And throughout the whole elite membership, I will basically guide you throughout your whole learning process. There are a lot of like-minded traders there who are all trading the same concepts, looking at the market the same way. So if that's something you're looking for, you will find some information about that in the description. Other than that, guys, I do appreciate you taking the time to check out this video. I hope you found some value. If you did, make sure to leave a like, subscribe for more content, and I would appreciate if you could just leave a comment and show some love. That would be amazing. Cool, guys. Thank you so much, and talk to you later. Bye.